All right, everybody. Thanks for joining me in part two of trading strategies. I wasn't able to complete it all last time, so I'll go ahead and finish up the rest of this as well as give a quick overview of what we discussed in the previous lesson. So the trading strategies that we're going over is day trading, position trading, investing, ICOs, whether you're a flipper or an investor, momentum trading, pump and dump traders, or as I like to put it, working against them, and arbitrage trading. So of course, the most popular one that everyone thinks that is the way that you have to trade is the day trading, wave riding. This is a lot more fun and noticeable with BitMEX since I've just been doing BitMEX the past 2 days. Even though you can still do it with altcoins, but lately altcoins haven't been as volatile and as lively as they used to be. But with that being said, basically day trading is just, as we discussed previously, is just buying low, selling high within relatively small time periods. Whether you use the 1 hour candlesticks or the 15-minute, 30-minute, whatever the case may be, you usually have multiple trades within 1 day. So it's known as like high speed trading basically. Some of the things that we went over, like I said, buy low, sell high. Some people close the positions at the end of the day to mitigate risk. When I do margin, I definitely try to do that because I don't want to go to bed, worrying about whether or not my margin is going to get liquidated. Unless we're in a for sure bull run, then it's pretty easy to say what you should do there. But anyways, it's heavily dependent on technical analysis. It has a lot of competition with robots. Most of your opponents are bots, not really people, even though there are obviously a lot of people that trade. It's fast-paced trades, and it's very much a high-risk, high-reward system, which could be mitigated in terms of risk by diversifying a lot. The other trading strategy that we already covered was the position trading, which is basically trying to get into the best possible position within a coin or an asset. So you kind of wait, they go through these little pump cycles of like, riding this huge wave up, and then it starts to slowly bleed down and crash down and just continues to go lower and lower and lower until it hits an accumulation floor. Once you find and notice that floor, position traders, their whole goal basically for the entire day is just finding that floor. Traders like Yoda and some other Twitter traders out there. But once you find that floor, you just accumulate on that floor, and then you wait until the either news comes out or the market just starts pumping on its own. And that way you have the best possible position within that trade, because there's nowhere else to go except for up, basically. It's easy for beginners to learn stuff. It's a relatively lower frequency of trading because you're not really riding the big waves. You're just more focused on finding the positions and then just selling them when they give decent returns. Pretty low risk because, like I said, you're trying to get the best possible position out there, and it's a lot. It's mid-term, short-term, long-term, depending on your trading style, but it's more mid to long-term trades. And then I believe that this is the strategy that we left off at before, which was the investor slash holder. It's heavily reliant on fundamental analysis. Basically, this is in my opinion one of the easiest strategies out there because you don't really need to learn or to know how to trade. You just need to know, spend time on doing the research on what technologies and what coins and what assets are really going to survive long term. Like a lot of people like Stratus, I personally don't really know much about Stratus, but everybody and their mother loves Stratus because it's a really great coin. Just like Ethereum, Ethereum is a really robust technology. Thankfully, I actually do know about a little bit about Ethereum, well, quite a bit. But just knowing a lot about a coin and whether or not it's just kind of like like an alright coin or like a game changer, a big competitor in the scene, can give you the confidence that you need to buy into a coin and to hold it and to hold on to it. It definitely helps strengthen your hands with the whole joke. They say, you need strong hands to carry heavy bags or to hold basically a steady position in an investment. If you're a real investor and you actually do a lot of the research on a coin, it's relatively low risk, usually because you'll be buying into something before it blows up out of control and out of nowhere. So like a lot of people that were really into Stratus back in the day, they bought when it was like all the way down. It was like cents or something. I don't know the price of Stratus or not, but they bought when it was like really really low, and even after so much time, it's still way higher than the floor is that I know from a lot of people that started investing in Stratus. Same thing with Ethereum. People that were really heavy onto Ethereum, they accumulated very low. I personally was buying Ethereum when it was $10, and I believed in the project. Even when it dropped down to like $6, I was still holding it. But I was more of an investor back then than I was a trader. But it definitely brought some great returns. So yeah, so investors, I would say it's relatively low risk as long as you know how to do it and you do it correctly. It's also low reward compared to day trading, simply because day trading gives you the opportunity to make, you're moving in and out of these trades, and you're making gains and also potential losses. But if you're good at day trading, then you'll be making more gains than losses, and over time that grows exponentially. Unfortunately, as an investor, once you buy into a position, you just wait as it slowly grows. The growth of it is very slow compared to day trading. I know I've done the math before, and people are like, oh, if I had just held, I'd have so much more money, etc., etc. I used to think like that. I used to be like that simply because whenever I did the math, I was like, oh man, if only I held my Ethereum, blah, blah, blah. But usually when you hold something, you don't ever sell it at the top. You continue holding even after it crashes down and everything. Or, you could still sell it, but usually it's never at the very top. Usually only day traders sell at the top. But anyways, but not only that, on the way up to the top, day traders have the opportunity to ride the swings and ride the waves all the way up to the top, and even the bounces down. Investors usually just buy once, and then like a few months later, a few weeks later, however long you're investing in a coin, you sell out. So it's just like one to one trade. And of course, even though that's a lot, that alleviates a lot of risk compared to day trading, at the same time, it also doesn't give you much opportunity to make as much money as you would a day trader. But the thing that a lot of people don't get is that they just try to jump right into to being a day trader, and they don't really study or practice that much, and then you lose a lot of money as a day trader. High risk, high reward. So if before you even hop onto the day trading bandwagon, I would highly suggest first becoming an investor, and just starting slow. Be a swing trader first. I was a swing trader when I first started, so be a swing trader, which is like trading like once a week, basically, like a longer term trader. I should have put that on this presentation too, but it's fine. Swing trading is basically just trading on a longer time period. Instead of like trading every single day, you'll just track the markets and maybe trade like once a week, once every other week, once every 2 weeks, something like that. Anyways, as an investor, you'll have minimal time consumption. That's kind of true, but also kind of not true. For the most part, it is true, because once you learn, heavily on these investments, on these coins, then you don't have to read up on them anymore that much, because you already learned about the coin. It's kind of not true just in cryptocurrency, because there's tons of coins coming out all the time. So you could definitely spend a lot of time just reading up on a bunch of different coins that are coming out, ICOs, etc., to be a valuable and a successful investor, since we are in a bubble, and is a very emerging market. So there's just a lot of things coming out. You need to have strong hands. Like I said, the more that you do research onto a coin, the more you believe in it, the stronger your hands get, and it's definitely necessary. And then you use the fiat average to figure out what you're making, not necessarily the Bitcoin average, because since there are two different markets, the Bitcoin and altcoin market, altcoins definitely bleed out whenever Bitcoin goes up, and that doesn't necessarily mean that the dollar value goes down. It just means that you're just missing the potential of whatever Bitcoin is rallying at the time. Alrighty. So momentum trading. Momentum trading is, I would say, maybe somewhat of a more advanced trading strategy, something that's not used as often as just the regular day trading, swing trading, or investing, etc. Momentum trading is basically figuring out where the momentum of the market is going to, or has gone to, and just trading as if history were to repeat itself, basically. Analyzing the momentum of the market. So for cryptocurrency, I think it's fairly simple. Well, let me start from the top of the bullets. First off, it doesn't require that much technical analysis or fundamental analysis or experience. Momentum trading is more of just seeing where people are moving where. Usually, whenever Bitcoin rallies up and then it crashes down and alts spring up, a lot of people go into like their favorite coins. Like you'll have people that like just trade Dash, for example, and Dash goes up and it spikes up and this and that. And then there's a lot of people that just trade Neo. A lot of people that just do Ethereum, even though they didn't really do Ethereum this time. But you have these people that they always trade their favorites because they believe in the coin. They're investors of that coin. So momentum trading is basically figuring out, if you want to go really deep into it, is just figuring out which coins are the ones that usually explode up a lot. One momentum trading strategy or anomaly that I've witnessed a lot, and you can actually go back to the timestamps and sort of map it out yourself, is that whenever Bitcoin rallies, there's always these random rallies on shitcoins. There's always these little rallies that go on with these low cap shitcoins, and most of them are pump and dumps, which we'll go over in a second. But usually, these groups that pump up a coin, or whales, or a group of people that try to manipulate the market by making a coin go up and trigger bots and all sorts of things. But then there's also these favorites that kind of go on, and one of the things that I've noticed that rallies up a lot is VIA coin and VTC coin, Vert coin, and I'm not entirely too sure why it doesn't look like a pump and dump per se, or maybe it is in the sense that people just shill it around the same time. But whenever everything goes down and there's no volume anywhere, VIA and VTC usually get shilled at some point during the rally, and then they go up like crazy amounts because they're a relatively low volume coin, and they just, and once people start seeing this green, like, oh, everything is bleeding, everything's red, and these two coins are green, and there's like these great stuff, then people start FOMOing in, and then they get wrecked. But that's one example of momentum trading, is the fact that I analyze that these two coins always rally up during Bitcoin bulls. So next time, if I really wanted to, even though I wouldn't, but if I really wanted to, then I could start accumulating, VTC and VIA coin during the next altcoin killer Bitcoin bull rally, and then just wait until they pump up and then just take profits once they pump up. But yeah, it requires a study of the mass market psychology. Just as an example, the VIA and the VTC, that's one example. But also, what I would say is the most general momentum trading for cryptocurrency is the fact that these are two markets: the altcoin market and the Bitcoin market. And it's I call it the life cycle. You basically would need for cryptocurrency, you would need a good understanding of the cryptocurrency life cycle. And the life cycle is that whenever Bitcoin breaks into a new all-time high phase and it starts rallying, usually it starts to seep a lot of the funds and the blood and the momentum of the altcoins into Bitcoin, because as Bitcoin rallies up and starts getting too high, the ARB bots will actually start selling all of the altcoins little by little, simply because Bitcoin is rallying up. So the price of Bitcoin is going up, and since Bitcoin and altcoins are attached together because you need Bitcoin in order to buy into altcoins, they're always paired together, then the ARB bots will slowly start to siphon away the price of the altcoins in order to make it equal to the price of Bitcoin, in comparison to the fiat dollar. So when that happens, I think a lot of people that either are momentum traders or they just kind of get the understanding of the cryptocurrency life cycle, they'll start to short the altcoin market and get into Bitcoin, and basically just exit out of altcoins until they see that the price has tanked, that it has bled for a while, and then that's when they start accumulating at lower prices in order to get back in. So with that being said, the momentum, the really good momentum strategy that I usually do, even though I missed the last one, but usually I like to do it, and we're gonna do it for SegWit 2 times for sure, is that a week or two you want to start exiting out of the altcoin markets, to get into Bitcoin ahead of time, and sort of beat the momentum of the mass market. So everyone's going to start exiting out as they see that the price starts to lower down. Smart money's gonna exit out prior to the price lowering down. And it's not really about trying to sell the top. It's more about trying to get into a safe position so you can buy back in at the bottom. Because once it starts bleeding too much, you don't want to take on really, really heavy losses, which is what stopped me from exiting out of the altcoin markets for Bitcoin Gold. But anyways, so that would be a very good example. One of the prime examples of momentum trading is basically just analyzing the momentum of the markets and beating them to the punchline, basically using that as a tool to make sure that you can buy low and sell high, basically. And you'd be competing with a lot of bots simply because, like I said, with triangulated arbitrage, they'll be exiting out of the altcoins little by little as Bitcoin starts to raise, and then after a while, they just dump the entire market. And then after Bitcoin Gold or whatever hard fork goes through, then the people pump back into Bitcoin, and that triggers the bots to, or I'm sorry, people pump back into altcoins, and that triggers the bots to also get back into altcoins. This is, I consider this mediocre difficulty, simply because it takes a little while to get the timing right. Momentum trading is all about timing, and even sometimes I mess it up, or it just kind of slips my mind like Bitcoin Gold did. But I'm not a hardcore momentum trader. I just use the very basics to try to leverage the strategy to the best of my ability. So I definitely recommend you guys reading up on this, basically, and also just looking back at some of the charts and seeing what the effect was of whenever Bitcoin goes up, all the altcoins bleed, and vice versa. They have this hedge synchrony whenever Bitcoin's bullish. However, if Bitcoin is not bullish, if there's like a bad hard fork or China ban or anything like that, whenever Bitcoin is in a bearish territory, then alts will also bleed, because people will just hedge into fiat, into the dollar, because that'll be the safest spot for them to kind of hang out at and keep their money at. And so next is the pump and dumps. People think that pump and dumps is Twitter personalities or whatever manipulating the market, etc., etc. Yeah, in a sense, that's true. They'll try to get the market to pump up the coin just so that they can dump on everybody. But there's also a lot of pump and dumps that are, I guess, white hat pump and dumps. I think like it's like True Pumps or Fair Pumps or something like that is one of the groups. It's actually a paid group, and it's basically a robot that automates everything. And the way that I see it is that it's just pure effing gambling. You basically place your bet in or whatever, and then the bot will bet for you, if I'm not mistaken, or it'll give out a warning saying like, hey, at this date, at this time, like 10 minutes ahead, a coin is about to be announced. And then like right when it gets announced, people rush to the coin really quick, either on Bittrex or whatever, rush to the coin really quick, and then they just buy in however much they want at whatever price they want as early as possible to try to get out as early as possible. So it literally just pumps the price all the way up to as much as it can, and then as people start taking profits, it just dumps the price back down. And that one obviously it's like 50-50, you got to be losers in order for there to be winners. So some people really, really like it because they like the whole gambling aspect of it. I think you might as well just go to a freaking casino. Like, why are you trading if you're just gonna like actually gamble? But whatever, that's just my thought. Usually they are very rigged, and there's a lot of people that cheat on them. They used to be a lot bigger a few months back, but I think that once all the dirt kind of came out about a lot of these people with the Telegram groups and even the bots, people would like hack the bot so that they got the message like 5 minutes prior, some weird shit, and then they would like sell that signal out to people as well, and it kind of leaked, and everything leaks, and it's just bad business. I would highly recommend to stay away from it. But yeah, they're usually rigged. There's usually a lot of people cheating them, etc., etc. Now, what I would say about pump and dumps, and the good thing about them, is that they create a strategy all of its own within the cryptocurrency space. And that strategy is what I like to call trapping, I guess. Basically, you kind of figure out which coins are listed for these pump and dump groups, because they only pump and dump really low volume, like dead coins, basically, like coins that no one really buys into, no one really invests, coins that are very cheap, that that can pump really high, and they don't have to worry about like news coming out or anything like that. So usually those will be like on the list of like these pump and dump groups. Now, if you can figure out that list, if you can analyze either the charts or just, I guess infiltrate the groups basically, and figure out the list of all the different coins that they pump, then you can go around and put like however much Bitcoin or whatever, like one Bitcoin each, or half a Bitcoin or point 0.1, whatever you're comfortable with. You can put that into, you can buy it when it's at the floor, at the accumulation floor, and then put a sale order like 300% above. And even if Bitcoin drops and Bitcoin tanks, it doesn't matter, because these coins are already like on the very, very bottom floor. Like no one really holds them, so no one's really gonna sell them. So you basically just put like a sale order, like 300%, 400% above, 200% above, whatever. And whenever these coins go through, or whenever these groups go through and they do their little pump and dump, it automatically triggers your sale, and you just made like 200-300% returns without really doing anything. It takes some time, because they only do these pump and dumps like probably like once a week, twice a week, something like that, and there's only so many groups now. Before it was a lot more active, but now there's only so many groups. But it's very easy. It requires no FA. The TA requires a little bit, just to zoom out and see if it's on the floor. That's basically it. As I said, it's an extremely easy strategy. It requires patience, because you're not going to be trading. You're just going to put the order, and you're going to have to put a lot of orders, like 100 different coins. But you just basically put the order, you put the sale, and then you just wait until it triggers, and you'll see like, I mean, if you do like 100 different of these pump and dump coins, you'll see probably like once a week your one of your things will trigger, or twice a week or something. Or if you just get the really good coins, like if you analyze the list on all of them, on all these little pump groups, then you may have your orders triggered like continuous, but that requires a lot more research. But anyways, with that little strategy, I know that there's some people that do use that. CryptoCore, I believe, uses that strategy from time to time, and I've been meaning to do it myself. I just haven't had the time to actually go out and research all of these different coins, but I've always wanted to. I've always heard that it does bring pretty good returns, and then there's not really much competition, because not that many people do that. Not that many people sit there and go figure these things out, or even think about the strategy to begin with. But it's definitely out there. There's a lot of different ways to make money in the market. And the second to last strategy is arbitrage. Arbitrage is, I would say, pretty hard, simply because you need to be fast. You need to be very, very fast. So arbitrage is basically arbing from one exchange to the other, the difference between the price on one exchange to the price on the other exchange. So let's say, if Ethereum was $100 on GDAX, and on, I don't know, Bitfinex or something, it was $90. So basically, I would sell it on GDAX, buy it on Bitfinex, and then I would just or I would probably buy it on Bitfinex, send it over to GDAX, and then sell it on GDAX for the higher sale amount. So you'll be buying it low on one exchange and selling it high on the other exchange. This is highly, highly competitive with robots, because they do this stuff immediately, basically. But it's still possible out there. If you go to cryptopia.com, they have a little arbitrage page that shows like 3 different exchanges, and it shows you like the differences between the arbitrage, and et cetera, et cetera. It's definitely still out there. I've arbed before and received like 15% gains on just like one arb opportunity. And I've had a few people make 10, 12% gains on arbs. It was really big with overseas, because those all of these premiums, but I think that those are kind of covered out now and balanced out. But yeah, but arbitrage is is another strategy, and it requires absolutely no technical analysis, no fundamental analysis. It's pretty low to mid risk because you literally just buy something and you sell something as quick as possible. It's just between different exchanges. But the hard part about it is that it does require you to be very, very fast, and it requires time to do this. You can't just buy something and then leave it there. Like, you basically only make money when you're sitting there and you make the arbitrage trade. Otherwise, if you go to bed, you're not making any money because it's not like real trading. But it's definitely profitable. There's a lot of people that even manually they'll make money arbitraging. But if you'd like to get into this, I would recommend maybe finding a bot out there. I know there's some pretty simple bots on the internet. I don't know which ones exactly, but there's definitely got to be bots out there. Just be careful with what you download, because if you download a keylogger or anything like that, then yeah, it could be bad. So just be careful. But arbitrage, another great way to make money in the market. And then this is the slide that I just created recently because I completely forgot to make it yesterday. So catalyst trading. Catalyst, first off, explanation of a catalyst. A catalyst is basically just a news update, basically, a catalyst that that helps drive the price either up or down, bullish or bearish, due to the mass market finding this big interest on whatever asset, whatever coin, due to the news that was just released. So a bearish catalyst would be, China coming out with their, oh, we're gonna ban all the exchanges, we're gonna ban crypto, basically. So that was a bearish catalyst that put Bitcoin and the whole market basically into a dip down from I think it was like 4,400 or something like that. I don't know, I can't remember. But anyways, it dropped like about like 43%, 47%. I honestly can't even remember right now. But it dropped it pretty low. It crashed the markets. So that would be an example of a bearish catalyst, bad news catalyst. Good news catalyst would be, on the 30th of this month, Metal is releasing their alpha product. So whenever they're like, these new coins are like releasing products or releasing upgrades, like Metropolis for Ethereum, for example, or anything like that, whenever there's like a good bullish catalyst, people like to accumulate a few days prior to a catalyst coming out, because when it does come out, it basically hits the public eyes and ears. So if there was, a catalyst, like for example, like Metals coming out with their alpha product, they're basically, whenever they come out with that product, people are excited for it, so people want to buy into it, and it just pumps the price. Now, what I want to do with catalyst trading is, what I actually do with catalyst trading is that I combine it with my day trading, position trading, or I combine it with everything. I always try to combine all of these different strategies together. So I try to move myself and the pack to accumulate prior to any sort of catalyst that's coming out, so that we can get the FOMO rally, the FOMO pump, when the news does hit the mainstream. There's this saying, buy the rumor, sell the news. So that's basically kind of like catalyst trading. There's a catalyst out there that the X, Y, and Z coin or whatever is, or like Trig. There's a catalyst that Trig may be having a contract with Chicago PD for like their smart guns and stuff, which would be huge catalyst. So, but it's just a rumor. There's no verified claim. But on the 26th, in 2 days, basically, they're gonna have some convention in Chicago. So, and there's definitely been talks of the CEO has said that there's people with the team that are talking to Chicago PD as well as LA PD to try to get a pilot going with their departments and all that. So in the convention or whatever it is that they're doing, they come out and say, oh yeah, we're starting a pilot for Trig, et cetera, like it's like the price is just gonna skyrocket. So when it does skyrocket, that's when you short the top, or you just sell the top, take profits, and you move on to the next catalyst, basically, or the next trade. My goal with catalyst trading is that I'm actually trying to get a whole research and development group, as I like to call it, to basically work together and go out in a professional manner and try to get all the good catalysts that are going to be happening for the month. And we'll be placing it on a calendar. And then that calendar will basically have every single date of like what coin and what the catalyst is, and like, from stars of like 1 to 5 stars, or a rating of 1 to 5, like how big this could be, et cetera, et cetera. So that I can go there, look at the calendar, and analyze the calendar to move the pack, from one day to the next day to the next day to the next day, so that we're always accumulating low and trading these catalysts one after the other, after the other, after the other. And the reason why it's so important for the Wolfpack to trade on catalysts is because, as a relatively large group, our capital is pretty big. So if we try to day trade just the group, like we're throwing up candles left and right, green, red, whatever the case may be, and we just start dumping on each other, pumping on each other, et cetera, et cetera. But catalyst trading, usually whenever there's like a nice good catalyst, you'll have the little FOMO rally pump where it's just like it shoots up like 100%, or whatever the case may be. Like when Stellar had the IBM partnership, it shot up like 200%. So when something shoots up like that, if the entire pack buys in at the bottom and it shoots up, and you guys can get out at whatever price or whatever, everyone's gonna make gains from it. Everybody, kind of like Neo. For the people that for my old OGs, when we bought into Neo, even now you sell Neo, you're still in profits, and that was due to the big catalyst that they rebranded, and they were and gas came out and this and that. Basically, the whole pack can make profits from catalyst trading, and that's why I'm so big on catalyst trading for the Wolfpack. So as the bullet says, potential for large gains from big bursts. It's great to combine this with all the different strategies. It's relatively low risk because if you accumulate before the pump, before the news release, then you can usually safely exit the market with profits without really worrying about there being a dump per se. And if you were just to do just catalyst trading, then you would have basically dispersed, that's probably a typo, but trades, and you wouldn't be trading as often like day traders or anything like that. You'd basically be trading just whenever there's a big news event that comes out. You would trade it actually a few days prior to, and then you'll ride the pump up, and then you'll short out, and then you'll move on to the next catalyst, basically. So yeah, definitely very important, definitely a very good strategy, and I highly recommend getting into catalyst trading. It makes pretty good profits. And I believe that is all. So with that being said, oh, and also if you're trying to do catalyst trading, always have these like updates. Thank you very much for joining me, guys. I think I'll close it out with this. Ciao.